Right now, in living rooms all across India, there's this quiet battle happening over money. It's the old school versus the new school, caution versus ambition. So who's actually got it right? Well, let's dive in and figure it out.
Okay, so if you're a young investor right now, you are probably getting pulled in a million different directions, right? You've got financial influencers promising you quick wins, your parents are preaching caution, and the market itself seems to have a mind of its own. It is super confusing, and honestly, it's a pretty dangerous time to be putting your money to work.
And this is really the core of the problem. A booming market made it way too easy to forget the basics. I mean, a lot of young investors just poured everything into stocks and mutual funds, and now that the music is kind of stopped, they're realizing, whoops, there's no safety net. The very thing their parents were always talking about.
So, how in the world did we get here? Well, the last few years cooked up this perfect storm. This cocktail of easy money and just sky-high confidence. And it's left a whole generation of investors in a really tricky spot.
You know, finance expert Saurabh Jain said it perfectly. Money is the glue that keeps the family balanced. And when that balance gets thrown off, we're not just talking about numbers on a screen. We're talking about real stress, real arguments, real family problems.
So what was the fuel for this fire? It was this absolutely red-hot Indian market that made literally everyone feel like they were some kind of investing genius. It didn't matter when you got in. It felt like you just couldn't lose. But, well, the music stopped playing now, and those strategies that looked so brilliant, they're starting to show some pretty serious cracks.
And that brings us right to the heart of this whole thing. It's a total clash between two completely different ways of thinking about money. Just look at this slide. It lays it all out, clear as day. On one side, you've got your parents' playbook, right? Slow, steady, safe. Think FDs, gold, real estate. Then, on the other side, you've got the new generation's game. It's high stakes, high reward, and it's all driven by that fear of missing out, FOMO, chasing the next big thing in stocks and crypto.
So let's talk about the heart of that traditional strategy, the fixed deposit, the FD. It has been a cornerstone of Indian savings forever, and for good reason. You give a bank your money and they give you back a guaranteed interest rate. It's simple, it's predictable, and there is zero drama. It just works.
So why has this been the go-to for so long? What's the secret sauce? It's this number, 5 lakh rupees. That means per person, per bank, your money is insured by the RBI. If the absolute worst happens, that money is safe. It's the ultimate financial safety net. Period.
Okay, so who wins this big financial showdown? Your parents or you? The answer might actually surprise you. It's neither. The real key, the real secret to winning, is finding that middle ground, a strategy that takes the wisdom from the past and combines it with the opportunities of today.
And this is what that middle path actually looks like. See that big chunk, about 60%? That's your foundation. It's built on safe, predictable things like FDs and gold. This is your financial bedrock. It's not going anywhere. And what about the other 40%? Well, that's your growth engine. That's where you can take some smart, calculated risks with stuff like stocks and mutual funds. See how it works? The 60% acts like a shield, protecting you from those big, scary market drops. But the 40%? That's your ticket to ride the market when it's going up. You get security and the potential for some serious growth.
But listen, here's a crucial point. Having the right strategy is only half the battle. Seriously, the biggest thing standing in your way, it's not the market. It's what's going on right up here, in your own head.
This right here is probably the golden rule of investing today. You have got to get your emotions out of the equation. Because that FOMO, that fear of missing out, it's going to scream at you to buy when prices are sky high. And then fear will tell you to sell everything when they crash. That is a guaranteed recipe for losing money.
You know, the classic movie Sholay actually gives us the perfect way to think about this. When it comes to your money, you need to be Jai, cool, calm, collected, stable. You do not want to be Viru, impulsive, emotional, and reckless. Real wealth is built on discipline, not drama.
And look, the numbers back this up, they really do. There was this study on an Indian mutual fund that found something fascinating. The fund itself, it returned 12%. But the average person invested in it, they only got 8% back. Why? Because they were jumping in and out, trying to time the market perfectly, and it cost them big time. The lesson couldn't be clearer. Patience pays.
Okay, so what does all this mean for you right now? Let's wrap this all up into a simple, actionable plan that you can literally start using today.
All right, here it is, your 4-step plan for financial success. Step 1, build that solid 60% safety net. We've talked about this. It's non-negotiable. Second, and this is so important, invest in yourself. The skills you learn now will pay you back way more than any stock ever could. Third, you got to channel your inner Jai. Make your decisions based on your goals, on logic, not on hype or fear. And last but not least, number 4, be patient. Remember, this is a marathon, not a sprint. Real wealth is built slowly and steadily.
So, I'm going to leave you with this final thought. Building real, lasting wealth isn't really about finding the next 10x stock. It's about consistently avoiding the big, dumb mistakes. It's all about learning from your mistakes, adapting, and making sure you don't make the same one twice. So think about it. What's the single biggest financial mistake you've ever made? And what did you learn from it?